welcome to Smaulgld's Gold and Silver Year in Review for the year 2016. Now, normally each week we do a top gold and silver stories for the week ended, but this week we're going to do top gold and silver, trends for the year ended 2016. Let's get right into it with gold and silver. Gold closed last week at 1133 and it ended the last week in December at 1150. That was up 8.5% on the year, up from 2015's close of $1,060 an ounce. So gold gained about $90 an ounce in 2016, and silver closed last week at 1573 and closed slightly up at 1588, which was up close to 15% for the year at $13.82. Gold silver ratio started the year at about 76 to 1, ended the year about 71 to 1. That's as a result of the increase in silver being about almost twice as high as the increase in the price of gold during the year 2016. Now let's take a look. Well, there's your Bitcoin. Also had a tremendous year this year. It was the best performing currency. I'm now accepting Bitcoin. For those of you who wish to help Smaulgld out, you can do so via PayPal or Bitcoin by clicking on the links on the site and donating directly through my Coinbase account, or I've given my Bitcoin address below this YouTube video and also the link to PayPal. So thank you very much for those who've donated during 2016 and for those of you who will donate in 2017. What I've decided to do is to look at gold and silver this year through the scope of charts that we've produced during the year. And let's take a look at some of those. One of the big stories of the year was the Russian central bank continuing to add massive amounts of gold to her reserves. Now, last year in 2015, the Central Bank of Russia added about 215 tons of gold to her reserves. It looks like through November they've added about 195 tons of gold to reserves in 2016. So they'll probably equal about 215 or more for 2 years in a row. That makes them the largest gold buying central bank on the planet. China is the second, but China is adding gold at a much lower rate. When I say China, I mean the People's Bank of China, not China the country. The People's Bank of China is adding gold at a lower rate, mostly because it's selling a lot of its foreign reserves in order to protect the yuan, and it has sold about $300 billion worth of U.S. treasuries. Now, during that time, during the past year, China has added about 70 tons of gold or so, but again, it's nowhere near the manic pace that the Russians are added. Keep in mind that Russia and China both buy from their own domestic supply, and I think Russia even has some extra that they export some to China. Another story of the year, the only other central bank that is buying gold in any amounts, large amounts, is Kazakhstan. We've started to track Kazakhstan gold reserves. They're adding. We'll continue to track that trend in 2017. Now, the United States, Germany, France, the United Kingdom, India, Switzerland, Netherlands, Germany. None of those countries, those are top 10, 15 countries in the world or central banks in the world who are in the charts for having the most gold. They don't add gold to their reserves, have not added gold. In fact, Switzerland has sold off 60% of its gold since 2000. England sold off a great percentage of it. Canada has no gold. The Central Bank of Canada has no gold. So when you hear stories about Netherlands, Belgium, Austria, Germany repatriating gold, all they're doing is reclaiming the gold that they already own, that they acquired decades ago. So even that is not a significant trend because Germany's not buying gold. The Netherlands aren't buying gold. The United States, to our knowledge, isn't buying gold and hasn't added gold to reserves in 60, 70 years. So the trend of central banks buying gold is one only in our three countries that we talked about: Russia, China, and Kazakhstan. All three countries, however, are not really buying gold on the open market. They all have gold reserves and domestic mines on which they buy directly. Now, for Russia, it's been a good deal this year because gold was lower this year, and same with China, and they were able to buy gold at better rates than they were in the prior years. But they're buying from their own domestic supply, which means that there's less of their gold that they mine domestically for the rest of the world. There's a nice chart here you can take a look at. All these charts that you see today on the YouTube channel are available at the link below on the Smaulgld website. They're much easier to see on the website, so please take a look at the website and you can see the charts much better. But you can see here the last month of November in 2016, China didn't add any gold to reserves, but Russia added 30 some odd tons. The month before, Russia added over 40 tons in October, and China added 4. So you could see Russia is clearly, over the last 12 months, leading the pack. China is second, but not even a close second to the amount of gold that Russian central bank is adding to reserves. Well, even though China hasn't added that much gold to reserves, they have sold a large number of U.S. Treasuries over the past 12 months. As you can see, they have sold a decent amount from this chart, and we expect that to continue. Russia has sold. I don't have a chart here. I do have a chart on the website. If you look at the Russian, if you ever want to see Russian stuff and Russian information, go here, gold reserves by country, then go to Russia and gold, and you will see the monthly Russian gold additions to the reserves. You will see their treasury position. Same with China. If you go the same way, you click gold and then you scroll down. Let's get back here. What I was saying about Russian treasury securities. Russia doesn't have that many. Russia has about 75 billion right now, and that's really an insignificant amount. It's less than 1 month's worth of QE3. So I don't make a big deal out of what Russia has. Russia's already sold about half their U.S. treasuries over the last couple of years. They never had a lot, but they have sold a lot, and that's not much of a story anymore. But I will continue to track them on the website when I update the Russian gold reserves. But the Chinese story is a bit bigger because they are the largest holder of U.S. treasuries, and they still have over $1.1 trillion worth. Another story of 2016 was the drop in decline in demand as measured by the Shanghai Gold Exchange. It was down about 25-30% in 2016, although the demand picked up in November and probably will pick up a bit in December as well because the price is lower. So Chinese central bank gold demand and Shanghai gold demand was lower this year, as were imports into Hong Kong. We don't have the imports into Shanghai, but the point being that Chinese gold demand was down in 2016, as was Indian gold demand. Well, there you have the Indian silver chart, but that's the same story with Indian silver. Imports were down about 60%. Indian gold imports were down about 40%. So the demand physically for in the eastern countries for gold was down in 2016, and partially that's a result of higher prices. Now, why did we have higher prices? Very simply because the West controls the price mechanism. And the reason we had higher prices starting in 2016 was, look here, we had a massive increase in demand for ETF products in gold and silver, as you can see, 2016. And when the traders decided at a click of a mouse, they were no longer interested in being long gold, they sold, and boom, down goes the supposed ounces of gold backing ETFs and silver backing ETFs, and with that drop also went the price. On the coin side, in 2016, American silver eagles were down. Now, U.S. coin sales do not impact, at least as far as I can tell, they do not impact the price of gold or silver. All they do is reflect, I think, what the retail buyer is buying. But even then, the number of retail buyers in the United States, I would say, is not significant. But it's significant enough that American Eagle sales have risen from about 10 million ounces a year from prior to the financial crisis to about 40 million on average over the last 5 or 6 years since the financial crisis, which means that silver has achieved a certain level of demand for what I would call post-crisis investors. So in 2016, the year started off very hot for silver demand. It looked like the U.S. Mint was on pace to sell about 56, maybe even 60 million silver eagles through the first 5 months of the year, and then demand fell off, and we ended the year at 37 million, about 10 million off from 47 million last year, which was a record, about 20% overall. Now, the gold story is a bit different. We have seen a shift now in investor demand in dollar terms towards gold. Gold sales in terms of American Eagles were the highest since 2011, and the highest total overall gold sales at the U.S. Mint were the highest since 2010 when you factor in American gold buffalo coins as well. So the U.S. Mint sold a total of 1.2 million ounces of gold, which was the most since they sold 1.4 million ounces in 2010. However, let's keep these numbers in perspective. 1.2 million ounces of gold sold in the entire year in all U.S. American gold eagles of 1/10, 1/4, 1/2, 1 ounce, and all U.S. American gold buffalo coins in 1 ounce size in 2016 was the equivalent of what was sold, what was bought by Russia, the Russian central bank, in November of 2016. So I'm trying to highlight here is that the gold and silver coin sales at the U.S. Mint are not significant on a global basis. The American silver eagle sales, when they hit about 50 million, are 6, 7, 8% of global silver annual silver mining production, and the gold sales are even less than that on the global annual mining production. However, they do indicate retail demand. Mentioned another trend again of retail sales of gold and silver in the United States that we saw when silver was dropping in price from 2013, 14, 15, that retail investors were preferring by a very large margin silver to gold, especially in the second half of 2016. We saw a shift in that to gold, where the number of American silver eagles sold compared to the number of American gold eagles in 1 ounce size was at 106 to 1 in 2014, but that dropped to 46 to 1 in 2016. Now, the chart, which is important, was the gold price in British pounds. Gold was up significantly against the pound. It was up 8.5% against the dollar, but it was up almost 30% against the British pound. And this highlights, and we'll see later on when we get to the bottom of this blog post pretty quickly. This is a short year in review. But that gold versus other currencies rose more in some instances than it did versus the dollar. And that's a reflection of the weakness or strength of the individual sovereign currencies. But Britain's currency was especially weak in 2016 because of Brexit. You can clearly see on the chart in 2016, the end of June, and then boom, the price of gold in pounds went from about 848 pounds per ounce all the way up to over 1,000 pounds per ounce purely on the Brexit. And basically, the pound has not recovered since then. It's still at about, it was about $1.50 before Brexit. It's still around $1.22 as we speak in January 1st, 2017. And even though the price of gold fell versus the dollar in the last 6 to 8 weeks, the price in British pounds, gold in British pounds, has held up fairly significantly. There's your pitch to donate to Smaulgld. Now, we do have a few stories. We'll go through those quickly that happened in the last week of December. 3 Indian companies have more gold than all of Australia. Those are gold lending companies. In India, they have tremendous amounts of gold. There was a story about hundreds scramble for silver coins found in demolished Chinese home. An interesting story there. You can click on the link. Now, one thing I did want to talk about was I did a podcast, YouTube with Dave over at X22. Some of you might have missed this one. I titled it, What Will Trump Do If the Stock Market Crashed? Dave entitled it, The Establishment Setting Up the Economy to Come Crashing Down on Trump. But either way, the main, I think, the important part of the conversation dealt with how Donald Trump's administration would deal with a stock market crash. My contention is, and I'd like to get your views on this in the comments below or on the Smaulgld blog post, what the stock market has been so important to the Obama administration, so important to the Fed in showing some type of justification, validation for their monetary policies. Obama will go out having said that the stock market has risen during his term, and that is evidence that we've had an economic recovery. The Fed has pointed to that. They stated at the beginning of QE, the purpose of QE, the purpose of bringing interest rates down was to reflate the housing prices and to boost asset prices. Now, I believe that Donald Trump is not as interested in creating this, what I think is an illusion of prosperity, because just merely revaluing assets higher doesn't make them more productive, doesn't produce more jobs. I think that what he will do is he will allow the stock market. He will not convene the president's working group on financial matters. He will not instruct the exchange stabilization fund. He will not lobby Janet Yellen to reinflate the stock market if indeed the stock market crashes. He's called it a bubble. And I think he rather would make the pitch that the stock market is not the real economy and continue to focus on what he thinks what his objective is to create jobs, and the way he'll probably want to create jobs is through government spending, infrastructure programs, and so on. And that the people most harmed, not that everyone won't be harmed in some sense, not everyone, but a lot of people will be harmed if the stock market goes down, because there are people that aren't wealthy that do have 401k plans. However, the people that will be hurt the most, I believe, are his political enemies. Those in Silicon Valley, those at the Washington Post, Jeff Bezos, who owns the Washington Post, Twitter, Facebook, companies with sky high valuations who make a fortune, not because they make a profit, just because that's the current market environment, where if you have zero interest rates and there's a speculative environment, companies don't need to make money to make profits because there's nowhere else to put money, and then stocks like that go higher, and because they go higher they can do further secondary offerings, and with that money they can pay sky high salaries. The people at the company make a lot of money, and that's money that could be used to lobby against Trump. So my view is that if the stock market comes crashing down, I don't think Trump's going to do a lot to change that. I'd like to know what you guys think. War on cash. Pakistan, we talked about last week, rejected a call to demonetize the 5,000 rupee note. That's a good thing, I suppose, because they were thinking about doing the same thing that India had done when they demonetized their 500 and 1,000 rupee note. Another pitch for Smaulgld to help Smaulgld out. If you're interested in buying gold or silver, please do so through the Smaulgld site. If you've already made your determination that you would like to buy gold and silver, I'm not telling you to buy it or not telling you to sell it. It's not a recommendation. It's not investment advice. But if you've already decided you're going to buy gold or silver, please check out the offers on the Smaulgld site. We have affiliate arrangements with a number of gold and silver bullion dealers, and you can compare prices and shipping. And if you buy through Smaulgld, then you pay no more, no less if you visit these sites directly through Smaulgld than if you visited them directly. Smaulgld will get a small commission. So it's a good thing for Smaulgld. It's a good thing for you. If you find the products you're looking for through the site, please purchase them through the site. I also did an update. I did not release a new blog post on the petrodollar because I did this blog post a few years back, but I did a YouTube on it. It's called Understanding the Petrodollar, Why Saudi Arabia Matters. Please check that out. You can visit the Smaulgld site to see the blog post, but you can get most of the information from the YouTube video itself. Also, if you're interested in all the Smaulgld YouTube videos and other podcasts, you can check the playlist below. But also, if you go to the Smaulgld site, there is a section podcasts, and you can check out all of the podcasts that we've done. And, okay, Korean gold smuggling soars. You might want to check out that story. It's about how they throw the gold off the boat on the way into harbor, and then they go back and get it, so they don't declare it at customs, but they figure out a way to track it and go back in the harbor and get it. Trump did pick a gold bug as his budget chief. You can check out that story. And that's about it. There wasn't a lot to report on during. No, there's a little bit more. Hold on. December 30th, de-dollarization. China downgraded dollar prominence in its forex basket from 26.4 to 22.4%. And then Modi, the Prime Minister of India, is trying to make nice with the Indian voters by giving them some type of incentives to go digital. But I think he has annoyed. There's still supposedly popular support in India for this program, but there's also a lot of turmoil as well. So he's trying to offer incentives to people to get them on his good side. Another story on solar panels. I read an article in Bloomberg, a link to it here. Solar panels now are super cheap. Now, the reason that relates to silver is, silver's used in solar panels, and there's been a lot of talk about they're working on a way to make solar panels without silver. And I looked into that technology, and the way I read it was that yes, you can eliminate the silver. However, it's not like you eliminate the silver and then you eliminate all that cost of silver. You have to re-engineer the solar panel such that it can use, I forgot, aluminum, I think it was. But the savings on it weren't that great. It was like a 20% per panel at most, I think, or maybe it was even, I don't remember what it was, but it was not some dramatic savings. So it's almost like it's not worth doing, especially if they're reporting now that silver panels are super cheap. Well, they're super cheap with the amount of silver they use. Now, in fact, one of the things that a lot of people maybe don't know is that they used to use a lot more silver in the panels anyway. So they've already refined the process of making solar panels so they don't have to use as much silver in the first place. And I think the Silver Institute said that silver used in solar panels in 2016 or 17 is about 80 million ounces. So, it's maybe 15% of global silver annual production. So it's not like there's this pressing need to get silver out of the solar panel. I don't think there would be that pressing need unless silver went to $100, $200. Now it might, if it goes there, then they may want to try these other these other ways of making solar panels. But and again, right now it's not an issue, according at least to this article. That solar panels are really cheap right now. And the last thing, yes, the gold price and world currencies. If you haven't seen it, Smaulgld subscribers have already received this email, which included the YouTube video. I list about a dozen or so world currencies and compare 2016 gold price versus those. You can click on the video in the blog post, or if you're on YouTube, you can just find the gold price and world currencies YouTube on the YouTube channel. And I think that now just about does it, other than another pitch to donate to Smaulgld and another pitch to check out the gold and silver offerings on the Smaulgld website. Well, thank you very much, and Happy New Year to everyone.